Are there risks in the Bitcoin market now? If so, how do we make a deal? If you're interested in knowing more about it, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. So go ahead and click the link below. After completing Know Your Customer, KYC, you will receive $100 in cash for every deposit worth $100. What does that mean? You can receive that cash money without making a deal. You can just withdraw it. There has never been such a promotional event. But now, it's 4 days until the end of the event. Will there be another after this? I can't guarantee. So please check on the link below and register as a Bybit user. You will receive your cash money for every deposit worth $100 made after completing KYC. Let's start with the weekly candlestick chart of Bitcoin. Judging from the weekly candlestick chart, we're going through a minor slide. Right. In fact, there are 2 types of slides. One is called a downtrend, like what we have ahead here, right? This is a downtrend. This is another downtrend. The second type, as shown here, is known as retracement. So there are actually 2 kinds of slides, i.e., a downtrend or a retracement. What we're having here is nothing but a retracement. It's the same situation. Right here prior to it, there's been an uptrend following the price surge. It's just that a retracement occurs halfway through it. It's actually an ongoing bullish trend, and then a retracement halfway through it. As for major slides like what we have here, of course, we deal with them differently from how we deal with the slide behind here. They're all slides, but we use totally different approaches to deal with them. When it comes to such slides, there's no way we're holding onto our spot goods. Instead, we should short futures so as to make a profit. As for this slide, it's simply a retracement. It's a retracement in response to the bullish trend. If so, the market is still showing a bullish trend, so we should hold onto our spot goods. However, in order to deal with unforeseen price drops in the market, we should hedge our spot goods. Trading futures will be a very wise and effective method at this moment. So there are 2 types of slides, and each type of slide requires a different approach to trading. For instance, bottom fishers try to take advantage of the slides and purchase spot goods. This is absolutely not the right thing to do, because the market is showing a downtrend. Can one bottom fish spot goods in the midst of this slide? No problem. It's because the market is actually showing an uptrend. The overall price is increasing. So those are the 2 differences. At least now, we've distinguished both from one another, what types they are, and the rules they entail. That way, we can avoid bottom fishing during a slide, and from getting rid of our spot goods during a retracement. This isn't worth it at all. Many might sell off their spot goods during the retracement here, and they end up making no profit when the price surge happens. It's a loss suffered due to one's misjudgment. Okay, let's take a look. In fact, the market is showing. Check out our first wave. The Fibonacci retracement stops at 0.5. Right? This is what the first wave looks like. The candlestick's real body hit 0.5, even though the tails overshot the expected line. But take a look at this wave. As you can see, the increase is more than 40%. If I remember correctly, it's around 46 to 47%. Yup, it's more than 40% indeed. And check out this retracement. Its value is 236. Yes, 236. I'd say the retracement happens between the values of 236 and 382. It's most likely to be where the retracement stops. I think it's unlikely to happen between 0.5 and 618. Well, take a look at this uptrend. Considering the degree of inclination of the candlestick chart, the consecutive bullish candles, the period of time, and other factors, it proves that it's a very strong uptrend. And this is what we're having here. The daily candlestick chart shows 3 waves of price surges, and half of it, I mean, the middle of the surge. Since it's the middle of it, it should be the strongest uptrend. Since that's the case, the retracement shouldn't be too great. Yet this is undeniably an ongoing retracement. We emphasized this in the previous videos. We're actually facing several risks. I think we were talking about it around this part. Well, why so? Why does a strong uptrend not entail a great degree of retracement? On the other hand, a weak uptrend is followed by an increasing retracement. Say, this part. You can see how powerful the uptrend is. It's a bull market with 3 waves. and the retracement stops at 382. Well, the value of 382 indicates a very strong retracement. As for the retracement further up here, it stops at 0.5. Right? It's a retracement that is less robust than the previous one. It's weaker than this. That explains its greater degree of retracement. Now we'll take a look at what comes after. As you can see here, it's a weaker uptrend. It gives birth to a bigger retracement, which stops at 618. So the current market is a very vigorous one. Therefore, we believe its degree of retracement isn't going to be an insane one, such as 0.5 or 618. Next, let's check out the 4-hour chart. A look at the 4-hour chart shows that, number 1, there's a rounding top here. We actually talked about this for times. Countless times. We did talk about it way before this. As you can see, we're testing the neckline. If the price breaks below the neckline, the retracement is most likely to become vigorous. The value of the neckline is around 27,000. Between 26,900 to 27,000. The price is testing the neckline. So guys, keep an eye on the chart tonight. Who knows if the price will break below the support tonight? Next, the diamond top. It's something we talked about so many times. You might be sick of listening to it. Anyway, let me draw it first. When the breakout occurred with this diamond top, I actually announced the news in the group. It was last night at 10:25 p.m. when the breakout was still around the corner. I'd given everyone a head up that there'd be a breakout soon. It's happening. Its price was 27,000. 27,300. I made a post that included an illustration and my thoughts. Of course, when I was making the post and placing my positions, that was slightly earlier than then. You're all welcome to join this group chat. I did point out that there are basically 2 times when you can enter the market. First, it's when a formation breakout happens. Second, when it breaks below the horizontal support level. These 2 entry points are more stable. It's known as right-hand side trading. Right-hand side trading is a deal made when the market is showing a trend. It's a safer trading approach. And it's free. Everyone is welcome to join it. Alright, let's check out the short-term cycle. Here's the short-term cycle chart. As usual, we first draw a line at the value of 27,000. Well, as you can see, it remains a prominent support on the short-term cycle chart, right? The support and the resistance. Now let's take a look at the latter part. A drastic slide that produces a box. We can draw a box here. And we have here a box breakout. Of course, this isn't a favorable signal in the face of the long position. Here's a small box. But then a bearish candlestick contributes to a breakout. The volume hasn't increased yet. If the transaction volume increases and a breakout exceeds the support between 26,900 and 27,000, the retracement is most likely to become robust. Now let's check out Ethereum, which is actually slightly stronger than Bitcoin. I think there's a reason behind this phenomenon, and it's explainable. As you can see, there's a support level here when it comes to Ethereum, but it's a very ingenious support. The price didn't break below the support line. No problem at all. Well, this support. Yes, that's right. It's actually derived from the resistance prior to it. As you can see, this is a classic reversal case. We take it as resistance ahead here. When it comes to this part, it becomes our support. When it comes to Bitcoin, the top. In fact, there are corresponding positions. When it comes to Bitcoin, it's around 25,000 to 25,200. Bitcoin is priced way beyond 25,500. But that's not the case when it comes to Ethereum. The price falls on this support line after the retracement. The price stops here. It shows that the support prior to it is considered powerful. As for Bitcoin, due to the previous uptrend, it's slightly weaker. Now let's take a look at Bitcoin dominance, BTCD. Okay, as for Bitcoin dominance, let's first draw a line here. When the price dropped by 40%, we ever emphasized that Bitcoin dominance had a support level. And now here's actually a resistance level. Since the chart indicates a resistance level, it's very likely that Bitcoin won't perform as well as Ethereum or altcoins. That means, throughout the retracement, Bitcoin is likely to experience a larger drop in price. A bigger one. If you ever consider doing a hedge or making a short call, you could adjust your positions using this approach. Finally, let's compare both Ethereum and Bitcoin charts. You can see that Ethereum was performing poorly in the midst of this major slide. It seems to be stable now. Right? It seems to be so. I think the main reason behind it is BTCD is going through its historical resistance. And it's a resistance that's been in our way for so long. It started in May 2021. It has been almost 2 years since then. Yes, almost 2 years. And it's not a short period of time. After all, Bitcoin is more than 10 years old. This resistance has been in our way for almost 2 years. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light shine through. If you believe it's true, baby, won't you let the light shine through for you?